Here at Camp Alphaville, one of the big topics of conversation has been China and its apparent demand for commodities. We've been trying to assess what's fact and what's fiction. Joining me to talk about that subject now is Stevenson-Yang of J Capital. Welcome to Camp Alphaville.
Thank you.
So, one of the things we've been talking about this afternoon, as I've said, is Chinese apparent demand for commodities. Some of the numbers we see, it seems everything's okay. I mean, steel production is supposed to be growing at 5%, but I mean, does that actually marry up with the reality that you see when you're doing your business and going around and assessing things on the ground?
Well, it's a funny thing. China, of course, has enormous demand for commodities, but the reality on the ground doesn't exactly match what you see in the numbers. The numbers have shown a tremendous surge in commodity imports in the first quarter through the first half of the year, and yet in China, everywhere we have stalled construction projects, we have looming empty property projects, we have steel mills that are stalling and turning off their furnaces, their blast furnaces. It's hard to triangulate. So one of the pieces of that puzzle is that it turns out that a lot of iron ore is being used to hypothecate loans.
So in other words, they're using that raw material to get access to capital because, I mean, famously we've heard about the tightening capital within China. They're turning to commodities to finance their everyday business.
Exactly. So you can't, in the state system, you can't get credit based on your future cash flows or the strength of your business. You have to get it based on physical collateral. And so if you don't have it, you have to acquire it someplace. Right.
Okay. And that is propping up, and it's being reflected in the numbers in terms of these apparent import numbers, consumption numbers we're seeing, is actually a reflection of people just buying things to collateralize and rehypothecate.
In part, yes. So you see big imports and exports. You know, why would China export any gold? It doesn't have gold production that's very important. It exports gold because it's importing gold to collateralize, and then it's exported again once the loans are paid.
So, I mean, something we hear a lot from the World Gold Council and some of the other industry bodies is that the Chinese have, as they're becoming more wealthy, becoming more middle class, discovered this sort of affinity for gold. But from what you're saying, that doesn't seem to be actually the case whatsoever. I mean, really, the demand has been driven by financing needs.
Yeah, I'm often told that Chinese people have a cultural affinity for gold or for property. I respond that Americans must have a cultural affinity for healthcare. The point is that where the money goes, that's where you have a cultural affinity. So everyone who has a cultural affinity for gold who doesn't trust their currency.
And then if we move away from gold to something like iron ore, I mean, how do you see that market shaping up? Do you think that there's a lot of high-cost Chinese supply that can come out of that market to balance the sort of wave of seaborne supply that we're seeing coming into the country, or will that not happen? Yeah,
that's certainly true. You've seen some price support already from a reduction in exports from Indonesia and Ukraine and third-party markets like that, or some kind of lower-grade markets. You've seen a lot of Chinese product come off the market, and more will come off. But I think that the overall the drop in demand for iron ore is going to be much more extreme than that next year or the following.
Okay, so the figures we hear about 5% sort of steel production growth this year, I mean, those figures may not be borne out. I mean,
no, they're clearly not borne out. If you look at pig iron production, which I think is reported quite accurately, and the use of scrap steel, the two things don't add up. You can't possibly get to an increase in steel production. I think we're probably about a reduction of 2% or so in steel production, but the big drop hasn't come yet. When it comes, it may mean as much as 30%.
Wow. Okay, well, let's see if that happens. Anne, thank you very much.
Thank you.